So this is December 2021. Pilot paper means which paper? Pilot paper is a paper which is brought when there is a change in syllabus to show people how the new syllabus can be examined. Japan. Investment property, rental income received. Then we have sales, cost of sales, non-stock interest paid, trade receivables, distribution costs, administrative expenses, other operating expenses, dividends paid, installment tax paid, bank and cash, inventories, trade payables, ordinary shares, share premium, land revaluation reserve, retained earnings, 10% loan stock, maturity date is 2025, deferred tax liability. And let's go to the additional information. The following additional information are relevant. Land is to be valued upwards by how much? 3 million. Depreciation at rates are as follows with respective classifications. So building, furniture, motor vehicle, charge those rates, then categorize them as you have been shown. The investment property is being accounted for using the fair value model as per IS number 40, with the fair value being 25 million as at 30th September 2021. The company has assessed the expected credit loss on trade receivables and has summarized the following details. Niliona pepe hii inarukaruka. Kuna venye imepangwa hiyo not 4. So using the amounts, then probability of default. So amount, like the first amount is 26,600. Probability of default is 5%. Probability of default is 5%. Then the next amount, 12,600, there is a probability of default that debtors will not pay of 20. Then 3,400, probability of default is 50%. The expected credit loss is classified as administrative expenses. Included in other operating expenses is a payment of shillings 10 million made on 30th September 2021. This is the annual lease rental of computer and network equipment being paid in arrears. The lease is for 5 years beginning this year. Although the company is treating the lease as an operating lease, still there is no difference between operating and finance. The implicit interest rate is 10%. Any depreciation expense is classified as administrative expense. The company is yet to account for redundant cost estimated at 25. The management made a proposal to the board in August to lay off staff beginning October. The board is yet to approve and no announcement has been made yet, although the directors feel the amount should be provided on prudence ground. Okay. After computing the cost of sales, the management was made aware about an error with the inventory module in the accounting software, which understated the opening inventory by 10. So opening stock understated, wake up a plus. When you understate opening stocks, opening plus purchases minus closing. So opening understated, that one we will add. So after computing the cost of sales, the management was made aware about an error with the inventory module in the accounting software, which understated the opening inventory by 10 million. So that one you will add to the opening stock. And the closing inventory by 15. That one you will less. Closing stock you will subtract. The amount are considered material based on the company's what? Policies. That one means you just need to adjust them. Okay. The par values of the loan will be settled in 2025. The effective interest rate is 10%, and the company has classified the loan stock at amortized cost. The corporate tax rate for the year is estimated at 35 million. The taxable temporary differences as of 30th September 2021 are given below. So for adjustment to profit or loss, 47. For adjustment in revaluation reserve, 3. Total 50. The tax rate is 30%. Required, prepare the following financial statement for publication for the year ended 2021. The statement of profit or loss and other comprehensive income, the statement of changes in equity, and the statement of financial position. Don't you feel it's nice? It can be a good question. Yes. Before we start the table, can we do some data collection? Let's collect some things in this case. Yeah, like note 1, no, note 2, no, note 3, note 4. Let's collect note 4. That note 4, the company has assessed the expected credit loss on trade receivables. So they expect there are some people who might default to do what? To pay. So when you suspect that some people will fail to pay, then when you'll be preparing the balance sheet, ni kama hakuna kitu serious, ni kama ile tu provision for doubtful what? Yes. So let's try to get it. So you come here and say note 4, not working 4, but note 4. Note 4. Expected credit what? Credit loss. Expected credit loss. So expected credit loss, we have amount. So I write here amount, which is in thousands. The probability of default, then again here amount goes in thousands. So we can have it that way. So the amount is 26,600, 12,600, 3,400. So probability of default multiplied by 0.05, 0.2, 0.5. So multiply, get them there. Me, I'm interested in the total. So can you just multiply this times this? It's like just giving a provision for doubtful debts. So this times that, that times that, that times that, and we add. Total comes to 20.
28.
Right?
28.
Zero. 500. 55, 50. Are you with 55, 50, like that? Yes. So that's like the provision for doubtful debts. Actually, the real provision allowance for doubtful debts, which was our make is serious at it. Because you credit, when you credit what? You credit, credit, we expected credit loss. The allowance for doubtful debts. Watching to work at the another one, I think we want to analyze. Also, I think note 5. Let's check note 5. Note 5 also need maybe a small analysis. Included in other operating expenses is a payment of how much? 10 million made on 30th September 2021. Which month are we closing? 30th September 2021. So they paid 10 million on 30th September 2021. This is the annual lease rental of computer network equipment. So that's what they're supposed to pay. Being paid in arrears. In arrears means at the end of every year. So every year they're supposed to repay 10, 10, 10, 10, 10. Sure. Yes. Then the lease is for how many years? 5 years. Beginning this year. So this is the first time they are making the payment. Sure. Okay. Although the company is treating the lease as an operating lease, they trust whatever is that. So fine. So what you do, like there's a question we got a lease. I told you you do lease repayment schedule for how many years? For the current 19 moja. It will help. So come there and tell me lease repayments. So lease repayment, we want to amortize, it will help us. Lease repayment. Lease repayment. So lease repayment, you say here, balance brought down. Here, balance brought down. Finance what? Finance cost. They have said what percentage? 10%. Then you will get balance down what? Balance carried down. So let's have that small working. So you will work it for this year. This year is which year? 2021. Proceed with 1 year ahead. 2022. What is the value of that lease? Or a feature? But we can get, because they are saying this year we have made payment for 1, which is 10, and the payment will be 10, 10, 10 for how many years? 5. It means the value was how much? 50. Smell. Yes. So it was 50. 50. We are working in 1,000. So 50. Papa is carried down. Here should be rentals. Yeah, rentals paid. Sorry. Rentals paid is when you have the balance carried down. Sure. So finance cost will be 10% of this. That one comes to 5,000. And the payment every year they have said is how much? The payment they have said is 10. So at the end of year 1, this plus this minus this. That one will give you how much? 45. So this is 45. Then in that one, it will be 45. It will be 45. Interest 4,500. Another 10. How much will be outstanding at the end of year 2? 39,500. 39,500. Thank you. So, it will help us in the for profit account as part of finance cost. We will pick this one for this year. So then you can indicate for me so that when we get there, you'll be telling me the figures very fast. The book is yours. This is F cost. That is the finance cost. Then this one here, the 39,500, yes, the 39,500 will be non-current what? Non-current liability because it will remain outstanding after the 1 year. Then the difference, you can even do this. The difference is how much? The book is yours. Do whatever you want with it. 45 minus 39,500. 5,500. So 5,500 will be considered to be current what? Current liabilities. The fund is looking with us. That is okay. Is there something really? No, note 6 is not serious. Note 7, no, that is not serious. Note 7 is the stock to adjust. That is not serious. The power, the loan stock, that is not serious. The rest we can do in classification. So right there, allocation schedule, 7 columns. In fact, today they are going to be 8. You know why? You know, wameandika other operating expenses. Zimekuwa hapo. Now it should be adjusted. So andika have 8. Today they are 8. Those they should be 7. So 8 columns. If your book cannot support, make it landscape. So we want to do that classification. Let me do it here. Right. Eight. Eight doesn't count. So here you write for me what? Cost of sales, followed by give it distribution, give it. That at me. Ongeza hiyo katikati. Other operating. Other. You know, operating expenses needs it out. So other operating. Then finance cost. Then tax. Then revenue. Then so revenue. Then other income. balance. Have that table. Have that table. So, as per the trial balance, let's start with that. So, as per T balance, as per the trial balance, cost of sales was how much? 179 and 50. Sales, which is the revenues. Yeah. How much? 473 to 50. Loan, trading, distribution. 15,700. Admin, 30, 750. Other operating expenses, 45. Finance cost, hakuna kitu kama hiyo sahi. Tax pia imelipwa usilete. Hiyo itakuja baadaye. Other income, are you seeing rental? There was rental. Rent received. I see rental received, 20 what? 24. As that is the start point. We want to move it properly. We want to move it one by one. So let's go to the notes. 1, 2, summary. So note 1 was revaluation. Revaluation to book in eye. So you have the other comprehensive. Ignore. Let's go to note 2. Depreciation. So we charge as we classify. So depreciation. So depreciation, we have buildings. We have depreciation for furniture and equipment, and we have depreciation for vehicles. That is what I want you to do for me. Buildings, 2%. So you check the cost of buildings, 2%, then you check to admin. 20% of furniture and equipment, you check to admin. Motor vehicle, after you charge the 25%, 20% of depreciation goes to cost of sales, 80% goes to distribution. Can you do for me that work? Give me the figures.
Yes, administration. All of our operating efforts.
You should be having answers. Me, I'll just be picking your answers. So buildings, I want to take to administrative. What did you get? 6,000. Unanimous answer. Okay. Furniture is also going to admin. Admin, you are furniture. You got 26 to 50. What about 26 to 50? Okay. Then motor vehicle, what you got, 20% you took to cost of sales, how much? 6,000. And this other one? 24,000, meaning total was 30. Okay. That is okay. Let's go to where? Note number 3. The investment property is being accounted for using the fair value model, with the fair value being 25 million. When they are accounting for it at fair value, not at cost, when they're accounting at cost, then any increase in value is revaluation. But if they're accounting for it at fair value, increase is treated as income. So the fair value is 25. What was the fair value of investment property in the trial balance? Investment property, are you using 24,600? So it's again, again of 2,400, 400. So that 400 you treat as income. So fair value increase of investment property, of course, you take to other income. You have said 400. So that is 25. Fair value increase is 25 minus 24, 600.
You say if it was at cost.
When they were measuring at cost, then any increase is treated as an evaluation. It was our first topic, investment property, IS number 40. Rose, what you are asking, actually, how do you explain? When I explain, we're going to use examples. So these are actually they are short term. They will go under current assets. That is over. Let's go to number 4. Number 4, the company has assessed the expected credit loss. Credit loss 50 what? 55.50. They have said the credit loss is classified as admin. Yes, admin you are to buy. So expected credit what? Credit loss, we check to administrative. My able students got 55 what? 50. You got 2 million and what? That was number 4. Number 5, included in other operating expenses is a payment of 10 million. When you pay lease, that is not an expense. The way we have been doing lease repayment is not an expense. The expense is that finance what? The finance cost. So toa payment waliweka kama expense. So lease payment is not an expense. The expense is the finance cost part of it. So wanasema waliweka kwa other operating. So waliweka 10. So your 10 toa, it should not be there. So, but there was finance cost on lease, sure. So F cost, lease, we calculated, it was how much? We got that 5,000. So 5,000 back out. Capture it under finance cost. For that note, until we meet in non-current and current liabilities, that is over. Then check note number, which note number? 6. Let's go to note 6. Let us go to note 6. The company is yet to account for redundancy. So we make a provision. Provision for free. You want to speak about it? Redundancy. Of course, that provision is 25. Where do you want us to place it? Which is the possible place to capture it? Yeah. Just be back to class. Like a disturbance, just be back. Redundancy, which is the possible place we can place it? Admin, yes. Because all the employees, 25. Good. That is over. Number 7. After the cost of sale, so tulipata kuna opening was understated and also closing was understated. So opening you add, closing you subtract. Under which heading here? Cost of sales. Stock affects cost of sales. So opening inventory. Who's that? Undercast. It was understated by how much? 10. So that one you add. Then closing inventory was understated. That one you less. Closing inventory. Undercast 15. Yo unatoa. Then ukienda kwa balance sheet, you remind me, in the balance sheet, you opening undercast, this one now you will less. Well, this one you do what? You add. Closing you add. See closing? Yes. All right. We proceed. Note number 7 gone. Note number 7, 8. The par value of the loan stock will be settled in 2025. The effective interest rate is 10%, and the company has classified the loan stock at amortized cost. So let's let them continue to classify. So finance cost on loan stock. F cost, loan stock. So take the rate is 10%. So take 10% times the value of the loan. How much is the value of the loan? Loan, where are you? Are you seeing 50? No. Yes. So times 50, giving us 5. So that one goes to finance cost. Finance cost is here. Like that. That's okay. Number 9. The corporate tax rate for the year is estimated at how much? 35. So current tax, right there, current tax. Whoever is joining online is when we have started pilot paper. Pilot paper. So current tax. Current tax. They have said is how much? 35. So tax, here we come, 35. The taxable temporary differences at 30th September are given below. So for adjustment to P&L, meaning what is going to for the income statements. Then this other one for adjustment in revaluation. So that one will affect other comprehensive. Here in the P&L, it affects deferred tax or revaluation. So to P&L deferred tax, take 47 times 30%. So ukichukua temporary times tax the deferred tax. So take 30% of that 47. So deferred tax, 30% of 47. How much do you get? Ndio napata ngapi? 14,100. Imeisha. Hiyo ingine hii ni profit account. Hiyo ya revaluation itaenda kwa other comprehensive. We are done. Therefore, what you do, can you add for me vertically, accurately? So add vertically, then you give me all those totals. Then I think we can do presentation. People are done. So how much for cost of sales? Cost of sales, just look at the figures. Trust your calculator. 550. Then distribution followed by 93. What are the 93, 550, followed by 473, closed by us. Let's do presentation. From there, profit account should not take you. Don't take you how many minutes? Julius, pilot paper, page 1. Pilot paper, December 2021. Question 1. Julius, question 1. Right there, wanajita nani? Andika hapo. Vista Limited. computer bila pesa mingi. Kwanza kwa nini hiyo story yote? For the year ended when? That's what was in one. Kuna ile kitu tulisahau, sio ni class 9 tulisahau na nimekumbuka sasa hivi tena. Have we depreciated the list because wamesema kuna depreciation? The list whatever. Hiyo list. Class 9 tulikuwa tumesahau hiyo list. Even. Tena tumesahaulia. Even. Why are we forgetting lists? Noel, I'm going back there. So there is an issue. There is an issue. Read that note now. It was not which note for the list. But it's good we have not started presenting anything. Yeah? Note number 5. Included in the operating expense is a payment of 10. This is the annual lease rental of computer. The lease is for how many years? Beginning this year. Although the company is whatever, fine. The implicit rate is 10. Any depreciation expense is classified as? The cost we said is 50. Because 10 times how many years? 5, giving us 50. So 50 divided by 5, 10. So there is depreciation on the list on the lease. So depreciation, leased asset, just take the value, which is 50 divided by 5 years, is 10. So we are going to adjust only our administrative. So 10. So whatever you got on admin, increase it with 10. Sure. And then change to 103. So 1, badilisha tu hiyo 9 ikuwe 0. Now we make 1 as a prefix. 103,550. So Julius, kama umekuja late, umepata tumeanza, just take a screenshot. Sure. Take a screenshot of that board, then you will copy later. Because we can't wait for you to copy. Revenue. Are you ready to start? So revenue. Revenue. Revenue working 1 is how much? 4. 50. Cost of what? Cost of sales also working 1. Now, what do you want to repeat on this list? Nini hujaelewa, niandike kitu hujaelewa, because you know nikianza ku repeat I can even repeat tangulizi iungwe kwa hii dunia. So tell me exactly nini unataka niambie. Cost of sales we got 180. 550. So gross profit is how much? How we are getting the 10? You know, they said they are making lease payments. How much per year? 10. And they said beginning this year. And they are going to pay it for how many years? 5. So 10 times 5 is 50. So you know they were denying us the value. So it means that is the value. Then they are depreciating it for how many years? 5 years. So you take the 50 divided by the 5, then you get 10. So Damakla, I hope that is okay. Then Julius texts the entire class. Julius naganga hapo nyuma. Julius ndio naganga. Oh, no one nagongi mtu online. Julius, you are texting me. Text the whole class. Mtu anaweza kunini haraka. Anasema that these figures cannot be seen. Wacha usikie wewe umezoea online. Online. These figures cannot be seen because naona already Rosa ananiambia 292,700. Wacha online wasem. Are you able to see the figures? The only person who should let you see figures is people are seeing figures. So Julius, you are in a wrong group. Rudi huku kwenyu. Ati ni ngapi? 20? 700. Other income. Other income from working one, we got 2,800. We got 28. Now it is visible. Then cost of distribution. Distribution also working one. 39,700. Admin also working one. 103. 550. Finance costs, no. Other operating expenses also working one. 35. Finance costs 10. Class. Why are you here again? Or for future reference. So PBT, profit before tax, there is no problem. So can you adjust? One 107 50. Income tax also working one. 49 100. PAT interesting. PAT 58 150. Other comprehensive income. Nini tunarusha hapo chini? Kulikuwa na revaluation gain. Check note 1. Additional information number 1. What did they say? Land is valued upwards. Upwards ndio gain. How much? Thou shalt not lie. 3. 100. Additional information number 1. 3. Therefore, total comprehensive income is how much? Total comprehensive 61 150. Question. Nani hapo na swali? No question. So there. But let's go to Roman 2. By the way, it has never happened before. Pilot, unaweza pata swali copy paste. Guess what? Hi. I hope everyone is done. Let's go to the statement of changes in equity. Statement of changes in equity. Utapambana tuna publish mbele. Vista. Visitor. So you check the equity components in the question. Equity components that enough. Ordinary. So ordinary share capital. Was there sister in the pump? Was there sister ordinary? Share premium. Equal. My letter. Share premium. Share premium. Revaluation yuko. Yes. Okay. That upper. Evaluation reserve. Retained earnings as usual. Right? So retained earnings. Retained earnings. Total. I'm going to keep it there. Total. Shillings are in thousands. Balance brought down. Let's start with the opening balances, which we are capable of seeing before we adjust anything. balance brought down. Balance brought down ordinary is how much? 200, eh? 200. Share premium, 119,400. Revaluation, 21. Retained earnings, 130,100. Give me the total. Give us the total. For 70,500. Then you analyze them one by one. In the additional information, was there something touching on ordinary? No. Bonus issue, rights issue, they were not there. So this one was no problem, but there was a revaluation gain. Yes. So revaluation gain, how much? You got 3.
Yes.
However, there's something yeah, I almost forgot. Check note number 9. Check note 9. There was deferred tax to be adjusted in revaluation what? Unaiona? Yes, so we were supposed to, when you revalue asset, you tax that as surplus. So to deferred tax, to deferred tax, 30%. What was the temporary differences? 3. So actually, you to tax 30% of 3, 900. So you will come up here at revaluation to deferred tax, you say minus 9. So you tax that revaluation. Then revaluation, we are done. Go to retained earnings. Retained earnings bring the profit for the year. So PAT, profit after tax for the year in the profit account. The one we have just computed. I'm capable of seeing 50 what? 58,150. $150. What did they pay dividends? Because dividends should reduce the profit. Did they pay dividends? Did you see dividends with your own eyes?
Yes.
Where? 8,000. 80.
Yes.
Your profit per acre. Oh. Dividends paid. Dividends paid. Reduce profits with 80. 80. We are done. It's only between gains. Unless otherwise you can see something. So nothing else. Can you add for me to get the totals? This door is doing us a lot of justice. So give us the total. Suliweka. Kama watu haukuweka hiyo. Si wamesema ya pia ndio tofauti na hii nyingine. Hebu unaweza ziko mbili. Ziko mbili. Siku na ya pia ndio adjust the one to be adjusted here and there. And this one to be adjusted on the evaluation. So evaluation is in the copy and there. It's only at the beginning. Tukitaka nao balance let us sort of type. Tutachukua ya pia and there tuchukua hiyo. Lakini wewe unanipeleka mbele na niko huku nyuma. Ilikuwa decrease na tukatoa. Si ngoja tufike kwa ile. Because hii ni ya P and L, unachanga direct is the increase. Hii ni increase to P and L. Sindio? Na hii ni evaluation in effect. But tukienda kwa hii balance sheet and pick that beginning plus the increase even plus this one. Zote tatu. Niweke carry down. Sure. Aya, so give me the figures 200 200 119 400 23 108 finally haya tuende balance sheet. No, before doing the balance sheet, let me find PPE. Let's do PPE. So PPE, you can call it working 2. This is not a working, this is required for 1 2. So PPE, what is the problem of that? 6. What is the operation? PPE, we start land evaluation. Land evaluation wamesema ni ngapi? 140. Hiyo evaluation washaweka. So 140. Then buildings like you will take 300 minus the accumulated. Accumulated was how much? 48 minus what you charge. I don't have that figure anymore. What did you charge on buildings? 6,000. So remove everything. You get? 245, 800. Then we have F&E, furniture and equipment, the same, 131, 250, minus accumulated was 87, 050, minus how much did you charge on F&E? 26, 250, subtract. How much? 17, 950. Motor vehicles, 120. Minus accumulated on motor vehicle is 22. During the year, it is the one you charge 30. Check your allocation schedule. There was 6, and the other one was 24. Eh? Yeah, 30. So can you subtract? 68. Kuna asset yenye napenda kusahau size, hakuna kusahau list, ndio? Yes. So list asset. List asset. The value was 50, sure. So far we have only depreciated how much? 10. So 10 per x. This was year 1, giving us 40. Question. Can you add for me all this? Those are the PPEs we have with that question. Gapi? 511. 511. Look at the balance sheet. I want to leave this profit account in case of anything we can trace. Eh? So when they put again online. So statement of financial position. Sasa bado mko na nguvu ya kutoka hapa class ati bado mnaenda happy, mtu anafika kwa nyumba saa 7 usiku. Hiyo ndio kujipenda ama? Toka hapa ndio kwenda kulala. Kesho Mungu hapa. So Vista Limited. Statement of financial what? Position. As at 30th September 2021. Shillings are in thousands. Kuna mtu alikasirisha leo. Ati mwalimu, I need some 3 hours with you, we sit down. Kuna vitu zinanisumbua sana kwa group. 1, hadi kupata NCI. 2, retained earnings inamsumbua. Ni mtu set 5, si naona umeshaanza kusumbua jamaa. Set 5. Nani alikwambia ufanye retained earnings kwa mtihani? Nifanye, ndio Paul. Paul utafanya retained earnings kwa mtihani? NCI. Anybody struggling with those things, you are focusing on very bad grounds. Eh? Those 2 are just leave them. In fact, if you want to know that you will not get them, leave them. Then fanya enda kwa swali zingine zenye unaweza fanya ufanye. Uone kama time itabaki urudi fulani. So because you will not have time, it means you could have wasted more time. So yeah, you're wasting time for 2 ticks, which you will also not get. Eh? So there is no need. Those 2 things need them alone. Post the postables, then you move ahead. Non-current assets. Let's go there. Those are not things to disturb your head. Non-current assets. PPE. Good. Wachana mambo ya return earnings kabisa. Return PP 511 750. Ulikuwa na database. Mwenye kuna swali ilikuwa na database. Hii kuna database ya kuweka. Hiyo investment property at fair value at kuti kaka. Ama tuweke tu hapa. There is no problem. Sio? Just place it. But you take the revalued amount. Investment property, how much? It was revalued to 25. Welcome. What else? What else would mean intangible asset any? If it was there, you would have saved. So just add. Unajua kuna mtu kwa mtendea isiko balance anakasirika. Mpaka inamwharibia mwisho hizo swali zingine zimebaki. Na kuna mtu anafurahi tu ameangalia the all 5 questions ni topics anajua hizo topics si swali. Those topics. Na I know that person will pass. Anajua hii ni published na hii ni group. Hii ni agriculture na hii nyingine ni hiyo nyingine. So how much is this? 536. Current assets. Current assets. Current assets. Let's be inventory kuna adjustment. Right? So inventory. Take the one we have. Opening now we subtract. You subtract the opening, then you add the closing what? Stock. So inventory alone was given as how much? 41,100. Yes. Subtract the opening stock, which was understated. I don't know what. It was how much? Then you add the closing stock, which is how much? 15. So make that adjustment. All right, so that is how much? 46? 100? Maybe 2%. All right, receivables. Receivables, they gave us how much? 42,600. However, tulikuwa na credit ile jina tatu walikuwa wanaleta hapo. Simi allowance for doubtful debts. Tutoe. So take 42,600 minus that expected credit loss. What was the expected credit loss? We tried it. No, yeah, the probability we did it. So that minus. Yes, you have to reduce the debtors. How much? 37? 080? 50. 37, 050. Then bank or cash? Bank and cash. So bank and cash. We got a prepayment. Bank and cash 79, 50. I'm afraid of missing anything. Prepayment is not there. What else can be there? Enough. Hata kama iko, we don't care. Total assets. Noel, you will hold on kidogo for your question. Oh, but I should have said your Noel is asking, there is that in the trial balance there is installment tax paid. It is not an asset. Installment tax paid is going to reduce our current tax. So we go to current liability, utapunguza na ile tax umelipa. So you got how much? 627. Equity and liabilities. Sasa hapa ni kupumzika. Hapo ni kupumzikia. Equity and liabilities, you know what you do? You go to the statement of changes in equity, yeah? Ukiandika ordinary total. Sasa kuna kufikiria ordinary 200, share premium this, revaluation that. Mpaka unaangalia una copy hiyo. Fanya hiyo sasa. Do that one. Do that. So ordinary share capital. You are really you just 200 share premium. Share premium is how much? 119. 400. Revaluation. Revaluation 23. It's just a matter of copying, no reasoning now. Retained earnings, we are past reasoning. Retained earnings 108 to 50. Total 450, 750. Correct. Correct that bit. Don't stop. The fact tax. I'm going to lease. Yes, those three. Good. Non-current liabilities. Non-current liabilities. 10% ilikuwa loan what? Loan stock. 10% loan stock ilikuwa ngapi? Initial value. 50. It was 50, yeah? 50, but there was finance cost on it. Sure. So we have the finance cost. Finance cost was 5. 10% of this. Yeah. 5. How much did they pay? Did they pay any interest to reduce the finance cost? They paid. How much? They paid 5. 0. So we go back to how much? We go back to 50. Yes. Obligation under what? Under the lease. So I need to lease obligation. Lease obligation. Which one was long term? You have them in your somewhere. Huh? 39,500. 39,500. Then deferred tax. Deferred tax at the beginning, I don't want to go and do a working outside. I want to do it here. How much was the deferred tax liability at the start of the year? Huh? Is the last item in the trial balance? 12,800. During the year, there was to P&L, ile walituambia to charge P&L. Ile ilikuwa kwa note fulani hapo, note number 9. We got how much anyway? Deferred tax to P&L, the 47 times the 30%. What did we get? 14,100. Then to revaluation, revaluation gave us deferred tax of how much? was 900. That one I can't remember. You got two other in the statement of changes in equity. So from revaluation, we got the deferred tax of 9. So take this plus 9. That's what it does. 27, 800. Our margin of safety. That one comes to 568, 50. Current liabilities, current liabilities, payables. Payables is on anything great, you know. Payables was not interfered with. How much? 19,800. Then back overdraft, kuna current tax. Sure. So current tax was how much? Then we subtract the installment which Noel was talking about. Current tax was, are you seeing note 9, 35? Current tax in note 5, 35. How much did they pay as installment tax? When you pay installment tax, you reduce your obligation. 5,500. 22,500. So take that minus that. Mayona. Monesh. We are also struggling. There was installment tax paid in the trial balance. Installment tax paid in the trial balance, 22,500. It comes to 12,500. There was a provision which these people made during redundancy. You know, that says expected liabilities. Equal note number? Equal note 6. Provision for what? C. 25. Higher. Lease obligation. Sure. Lease obligation. You had worked it out the current. So I'm not disturbing myself anymore. How much did you show us current? 5,500. 5,500. See, check the 55. Where we amortize the lease repayment. We are tired. Can you try to add? Huh? It's more. Less, more, which is big. More by how much?
3,000.
Repetition. Hiyo 3 natoka wapi? Hii nitaona hiyo 3. James is saying the revaluation PPE. James is saying, can you check PPE very fast? Okay, hii inakuja ngapi kidogo tu. This one comes to how much?
630,
630, 850. So James is saying PPE ndio tuangalie. Yeah, but it is true. Unaona PPE land, can you check land in the trial balance? Yes. Land in the trial balance is 140. Then in note 1, land was revalued again upwards by how much? 3. So this one is supposed to be 140 plus what? 3. Najua hiyo James alikuwa ameshikilia, wacha nione. Let me see. So that one comes to 140 what? 143. So to the aggregate, instead of 511, 750, when you top up 3, 514, 750. Alright, so tupeleke huko kwa 50 ikuwe 514. But itakuwa sawa. 514, that one, 7, so inakuwa 530, 630. Correct. Hizo pilot mkuwe very careful nazo. They can bring one question there without fear. There is a question from pilot. Actually, today is the first time we make actually your pilot paper. That question too. Make sure I'm studying at the time you will find. Make sure we catch in the rafiki yako discuss. Munaenda kwanza mnakunywa coffee, then you come back. That question is not hard. It's for, okay, it's coming from which topic? Professional farms. Yes. So you need doctors, nimeona surgical and prescription medicine. So here kwa professional farms. It's very easy, by the way. Unasoma tu kama revenue, naona hapo iko not 5. Not 5 parts. What you charge the patients becomes the income. So just analyze. Hizo zingine unapata ni expenses, you just extract. It's not that bad. So make sure umepitia hiyo swali before exam. Umepitia, no problem. So in the pilot paper niliopea ratios pia watu wa morning na evening. Ndio tutaangalia ratio utakuwa topic ya mwisho. So make sure umeangalia. Ukipata time ya revision utapata hiyo group ya pilot. Unaona kuna group hapo. But published tumefanya. Can we, what the published tikai hapo for now? Andike hapo chini, IAS number 7, IAS 7, statement of cash flow.
Now,
so for cash flow, I have like 1-page notes I want to send. When it's just 1 page. Tomorrow we discuss. So tomorrow I'm meeting you from 10:30. Yeah, from 10:30. So we discuss. Then hamuna maswali. Kuna maswali kwa hiyo. Hey, get this clear. There are questions in that past paper, but the cash flow which are there you're not supposed to do. Syllabus, before the syllabus change, cash flow we were doing under group accounts, consolidated cash flow. But after the change of syllabus, cash flow imerushwa kwa published. Even if you check the custom outline, the syllabus. So cash flow is not covered in group. Before it was in group. So the questions you have are cash flow for group. So we don't have cash flow for public. Actually, it's under published. Ukiangalia syllabus, cash flow imewekwa kwa published. Even if you are not keen, you might not know cash flow kwa hiyo syllabus. It is there. Imefichwa huko ndani ya published. So what I'm going to do is to search for questions for published cash flow. We don't have, but I'll maneuver at night to get at least 1 or 2 questions. Meaning that topic will just finish it tomorrow. We don't have much questions, but provided you understand how it is done, with the 2 questions that are okay. So we do them tomorrow. Then we expect one analysis. Mkitaka hivi kingine tunaweza fanya small division. So allow me to send. Online you can just log out. You will get it in the groups. Even you mtu amengoja hapa chini, unaweza anza tu kuenda. Mtapatana kwa gari. But kama mna haraka, you can just wait.